Welcome back, you guys, to Andy the Banker Show. We have a lot to discuss in today's episode. We have the conflict in the Middle East. The stock market is being so resilient, you guys. Like the stock market just seems to be going up. We want to discuss about the IPO markets. There's so many new companies that's coming out, yeah, and they're getting a lot of traction. Like this reminds me of 2021 market days where, like, when you had an IPO, it just shot up, right? DoorDash was shooting up at the time. There's just so many, and then I also want to talk about this company that's been popping up recently. It's been so popular, in fact, and it's not a US company. It's, in fact, a company that makes toys called Popmart. So let's get into it, you guys. The first topic let's go ahead and discuss about is the conflict in the Middle East. Wow, definitely took me by a shocker. I wasn't expecting it. But what took me even more as a shocker was how the stock market was so resilient. Because this whole time, when I had thought about, you know, geopolitical risk that was happening in the Middle East, I was expecting the stock market to calm down. I was expecting there to be buying opportunities. Now, obviously, I don't hope for the conflict to escalate. That is not what I wish for. But just from historical patterns, anytime I've seen geopolitical risk like this in the past, we had moments where the stock market came down. There was times of buying opportunities. Now, I'm not saying there would be a 10% drop or 20% drop, but there was something like a 5% drop. And they were, every time I bought during these geopolitical times of uncertainty, I typically made a lot of money on them. So I was expecting the same thing. But however, the stock market has been very resilient. It's been going up and up. And my thoughts on this, I see a lot of oil stocks going higher, right? The reason mainly is because if the oil supplies go down, demand stays the same, the price goes higher because Iran is one of the countries that produce a lot of oil. And if their supply lines are disconnected, the people that buy their oil has to buy the oil from somewhere else, causing demand to go higher. And why is it so important? Is because if oil prices go higher, then inflation must also go higher because oil essentially goes into every types of business, causing inflation. And if inflation goes higher, that is a big destroyer of wealth for many people. This is one of the reasons why the Federal Reserve, Jerome Powell, is always watching into inflation. Is because if inflation gets out of control, you guys, it just can't happen. It's going to destroy so many people's wealth. So as a result, if inflation goes higher, that's where he starts tightening the economy. Now, when I say tightening the economy, I'm essentially talking about short-term interest rates, increasing short-term interest rates so that the economy slows down a little bit and inflation does not get out of control. And that's the biggest fear here, that if oil prices go too high, too fast, it starts increasing inflation. And once inflation starts, I don't know if you had felt it. Inflation, it's kind of like a wildfire. Once it starts, it's really hard to tame it, right? And once it starts, it kind of has a mind on its own. It starts having more inflation, creating more inflation, and so on. So that's one thing that I am looking for. If there is higher inflation, I have been buying more into my Costco stock. Costco, out of the four companies that I hold Microsoft, Costco, Google, and Apple stock. Costco is one of the companies that I'm expecting to do very well during inflationary times because they have a lot of pricing power that they can pass on those costs to the consumer itself. Now, the second topic I wanted to talk to you guys about are these IPO markets. Holy cow. There are companies like Chime. It's a freaking bank going super high, right? Companies like Circle Internet Group. What do? They literally transfer money internationally and they make 98% of their revenue from interest income. Yet when you look at the freaking PE ratio of these companies, it's like 1.6K PE ratio. I didn't say 1.6K market cap or revenue. I'm talking about 1.6K PE rate. Like the freaking valuation of the company is at 1600. That's I never seen a company like that, especially for a company that makes 98% of their revenue again from freaking interest income. Like I don't know how fast a company grows when they're earning interest, and interest rates are not that high right now. Now, on other hand, you have companies like a Circle Internet Group where people are there's just so high, so much hype into these companies that I don't know if they're trading on financials, and that's the scary part. Is that at this moment in time, I do fully believe that they're not trading on financials, and they're actually trading on vibes, right? Trading on feelings at the moment because there's just so much FOMO in the market. You have CoreWeave starting it off, going like crazy the last 3 months. And for people that don't know what CoreWeave does, it's essentially they buy NVIDIA chips. Right, they buy the latest NVIDIA chips and they put it into data centers, which they rent it out to people that want to try AI. Now, why is this so important? Is because the reason why they're able to get the latest NVIDIA chips is because NVIDIA is a huge investor into CoreWeave. So as a result, they sell CoreWeave the most and latest chips. And not only that, they send a lot of traffic to CoreWeave because NVIDIA is the primary investor into CoreWeave. They want to go ahead and make sure CoreWeave succeeds, because if CoreWeave succeeds, they make a lot of money on their investment. So if one of the things that when people buy into NVIDIA chips, NVIDIA actually pushes CoreWeave as a preferred partner. And as a result, you see how their revenue has just kind of skyrocketed. Now, when it comes to Chime, you guys, it is a bank. All right. And one of the things about banks, why it's so difficult, as somebody that's been working in banking for 10 years, is that banking is a heavily regulated industry. It's hard to grow in an industry where you're heavily regulated. You're watched all the time. And so it's very confusing for me to see this company growing like crazy. And what's even more crazier is that if Chime is a bank, there's SoFi already. What makes them different, right? What makes them different from these big banks like the JP Morgans, the Bank of Americas? And if Chime has an investment portfolio, what how would they go ahead and defeat company like Robinhood? Those are the questions that I have on why this Chime company is trading so high when competition is pretty tough and it's a pretty tough industry overall. Now, thirdly, the third topic I wanted to discuss about is about this company called Pulp. All right, Pop Mart is it's essentially a toy company, and I didn't really know Pop Mart too much because it's not the type of thing, a hobby that I would get into, like these toys, these dolls that people are buying. And what's crazy about them is that when people buy into these dolls, they don't know which one they're getting. It's random. Yet, like the consumers are hooked onto Pop Mart toys, and as a result, when you look at the revenues grew 143% year over year, you guys. This is the company that I don't know how they were able to brainwash the Gen Z, but they're going crazy after it. They're buying it up like it's hotcakes, you guys. I never seen a toy company get this much hype this fast because just a year ago, I don't even remember this company being so huge. But now, like, it's getting sold out. Like, people are waiting in line just to shop at Pop Mart. And that's the crazy thing. And as a result of that, I'm actually thinking of buying into Pop Mart stock myself. So we'll see when the company opens. It is a Hong Kong company, so I will have to buy it through an ADR, which is essentially it's a way I have to buy a stock through a foreign investment, and not every single brokerage will allow you to buy Pop Mart. So that's an important thing that I do want to point out. But this is one of the very few times that I will be getting into an international stock. Now, the last thing I did want to discuss with you guys is about the idea of dividends. I don't know who it was that kept on telling you that you gotta invest in dividend stocks, because all of a sudden all the investors seem to care about is dividends. Like, oh, Andy, this company gives you a 4% dividend. I want to buy into this company. Oh, it gives you 5% dividend. Oh, I want to go buy into that company. Like, since when did dividends become the most important factor? Yes, they're important, right? They're a way of cash flow back to the shareholder. Yes, I get that part, but the idea of investing solely based on the idea of dividends is a little mind blowing to me, guys. Like, that one is like, what happened to revenues? What happened to cash flows? What happened to cash on reserve? What happened to net profit margins? What happened to return on investments? Like, all these other things that matter, all of a sudden people seem to be like forgetting them, and they're all tunnel visioning into dividends. Which, mind you, I do need to point this out, that not every high dividend stock is a great pick, because some of them are dividend traps. When I say dividend traps, these are companies that may not be doing so well financially, but they need to raise cash. So as a result, they may increase their dividend rate, hoping for some investors to buy into their stock.